Hello and welcome again. This weekend market analysis is for the 7th to the 11th of August 2017. Last week was quite a bit of a volatile week because of the NFP, and price volatility was just too abnormal. Alright, at any rate, it wasn't that really bad. Okay, alright, without wasting your time, let's move on straight into the Forex factory economical calendar to see those high impact news announcements that are scheduled for this upcoming trading week. Alright, we have quite a few here that you want to take notice of, that you want to keep on your notepad, but bear in mind that we have bank holiday coming from the Canadian dollar axis and on Monday, and we have another bank holiday coming from the Japanese yen axis on Friday. Okay, so on these days you want to be careful trading all Canadian dollar crosses on Monday and all Japanese yen crosses on Friday. All right, bank holidays can cause abnormal volatility. Recall that banks are major movers of the market. Okay, so whenever they are on holiday, price tends to slow down on those affected currencies, or even cause abnormal volatility in the markets. Okay. All right. Aside from that, we have our interest rate announcements for the New Zealand dollar. So on Wednesday, the 9th of August, you want to really be careful trading the New Zealand dollar crosses around this particular hour, because that day is for interest rate. Okay, so our interest rate days are usually very volatile days, especially for all of the currency crosses that it will be affected. All right, in this case, all New Zealand dollar crosses on a Wednesday at this news release hour should be avoided. All right, except if you are a news trader, then you want to look at those pairs. Okay, all right. That is obviously followed by the rates statement and the press conference. So all of this hour from that time to this one here are usually volatile times. Okay. All right. Aside from that, I don't see any heavyweight, high impact news announcement. Intraday traders needs to be careful with all of this. All right. Intraday traders must be careful with all of that. Long-term traders, you want to be careful with the interest rate that's coming from the New Zealand dollar axis. All right, on Wednesday, long-term traders have to be careful with that one. All right, this is what we have in the calendar. Let's now move into the charts to do our weekend market analysis. Let's begin with the euro against the American dollar. This is the weekly time frame. Last week we saw prices spike to the upside, but then could not keep pushing, coming back down again, but closing above the more significant swing high right there. Okay, this is not an inverted hammer formation that you want to trade. That pin bar is closing above that level. All right, this level here that has acted as resistance and may now act as support. If you click on your sell button right there, you will be effectively trading against this level of support. So you'll be effectively trading against support, and I am sure you are not ready to do that. Okay, so this is not a pin bar. You will be trading. We are not looking at that. Let's even look into the monthly time frame to see what is going on there. All right, in the monthly time frame, let me actually zoom in this chart so you can see clearly. In the monthly time frame, you can actually see what price is doing at that level of former resistance, which is now acting as support. If this candle hesitates for the entire month, for this month of August, and we get a congestion candle closing this way, all right, if price remains this way, that means probably we have price hesitating around this junction for the whole month until the month of August comes to an end. Then we are going to see further pushes to the upside. All right, price is going to be driving again to the upside, even in this momentum. an equal length of this candle right there. Okay, so effectively we might be seeing the breakout right there. This is the congestion, and there might be a possible continuation pattern. So you want to be careful with the euro against the American dollar going short. This pair is still absolutely bullish, and it has enough potential to keep pushing to the upside. All of what is happening right here might be a congestion. Price is only taking a breather after this heavy run to the upside. Price is taking a rest, just a quick rest around in here, and for the next month, probably September, price will be pushing to the upside again. So the bulls are not over yet. You want to be careful looking for short opportunities right now. Price is still bullish, but we are seeing some hesitation before that bullish push might resume. Okay, all right, so let's zoom into the daily time frame to see if we have anything here. Well, I think the hesitation has just started. The range has just started. The NFP on Friday was able to drive price to the downside. Don't be surprised if you see price just wiggle around this area for the entire month. Then we have a range, and effectively again price are kicking to the upside in the month of September. So euro against the American dollar, we might be having a range formation. There is a possible range formation that should be coming up. Maybe price bouncing around this area again and kicking to the upside, coming back down. So you really don't want to go short against this level of support. If price breaks that level of support, then we'll be looking probably to squeeze some shorts before hitting the next level of support right here. But for now, based on what we have on the chart, you don't want to go short against this area that should act as support. We are having the anticipation that price might be ranging from this point on, where we'll be seeing the breakout congestion continuation pattern in the monthly time frame. Okay, all right, 1 hour time frame or even the 4 hours time frame, where that NFP price spike here for 8 hours, price kick to the downside. There is nothing here for us to trade. Okay, no valid setup in line with our trading strategy, and even in the 1 hour time frame, there is still nothing in line with our trading strategy here. So we don't have any valid setup here. Okay, all right, before we move into other pairs, let's look into this trade. Just a quick review of this trade that we were involved in from last week. Okay, we were actually involved in the a short trade here in the sterling pounds against the Australian dollar, coming from the daily time frame. Obviously you can see the setup itself. This was a previous swing low right here. Price gave us that breakout, came back to retest that low, and we got the bounce right here. This was one of our signals for last week that we took, and that trade has been in some profit. We have already cashed out 50% of our profit, and we have trailed our stop loss to break even. Okay, so it is sitting at a risk-free position right now. We are very hopeful that as soon as the market opens, we are going to see further pushes to the downside for us to make more profit and close that position for Monday. Okay, so if you are involved in this trade, I am sure you have already cashed out your 50% profit, and then you are letting the remaining 50% run for Monday. All right, okay, let's now look into our other high quality pairs that are waiting for us for this upcoming trading week.